If you have spent any time in any credit card review groups online, then you know that people either love these cards or they hate these cards. Let's check out what Credit One has to offer. So I sat down and I went through a bunch of their disclosure statements because Credit One has several products. And I wanted to go over with you what I found and what to look out for before you start working with them. These cards are not designed for people who have excellent credit. For the most part, they're designed for people who are trying to recover from bad credit or who are trying to continue to build out their credit. So that means that the rules, the fees, the risks, they're going to be different than what you find with your bigger, more known banks. Think Chase, Capital One, Citibank. So today I want to break down who these cards are actually for, who can realistically get approved, the fees most people completely miss, what surprises them about how these fees are actually charged, the warnings buried inside the disclosures, and whether these cards are useful stepping stones or they're complete mistakes. So let's start with who Credit One is actually targeting. Credit One is not trying to compete with your luxury brands or like your big travel cards. They're not targeting people with a 760 credit score who buy luxury brands and do luxury travel. If you want a six-figure limit, this probably isn't the card for you. So they're going to target people who have poor credit, people who have fair credit, people who have really thin credit lines, meaning they've only got one or two trade lines in their entire credit report. Maybe they're trying to recover from bankruptcy. They might have collections. They might have charge-offs. And likely they've been denied in other places. So that's the lane that Credit One travels in. And if you can understand that, then the structure of these cards are going to make a little more sense. Now, that does not automatically make these cards good, but it doesn't automatically make them bad either. It all depends on your situation. And that's important because if somebody has a 520 credit score because of a bankruptcy, or maybe they've gone through divorce, lost a job, have medical debt, their options are going to be far different than somebody who's coming to the table with an 800 credit score. There are a ton of options that Credit One has. There's Platinum Visas, there's an American Express, there's secured cards, there's cards with no annual fee, there's cards with annual fee, there's cards with different APR structures, and there's cards with different fee schedules. And some of the disclosures are really different. For example, some cards are going to show at 28.99% interest, some are going to be at 30.74% interest, and some go all the way up to 31% interest. An interest rate that's that high is designed to get you into debt. So the only way to counter that is to get the card and really not use it so that you don't have to carry a bunch of debt that you can't get out of. So some of these cards will have a $75 fee for the first year. You pay that $75 right off the bat, and that becomes your first charge to the card. And then every year after that is a $99 fee. But here's the kicker. It's billed in 12 increments. So it's billed over 12 months, which means you will never not carry a payment with Credit One. So when you think that you've paid the card off, you will still have a bill the next month. And that's where people end up messing up their credit even further, is they believe that the card has a zero balance and then bam, they get a late fee because they didn't pay that annual fee that's been split down into 12 months. And now the minimum payment issues. The minimum payment structure is a little bit different than normal everyday cards. So for this card, you're going to pay 5% of the outstanding balance, or $30. Now, to most people, that doesn't sound like much, especially when you have a card that only has a $300 limit. But typical credit cards only require you to pay the minimum payment of 2%. And with this Credit One card, it's either going to be 5% or $30, whichever one is greater, not whichever one is less. And if you miss that payment, expect to pay up to $39 as a fee. Let's talk about the things that I actually like about Credit One. I was actually surprised that some of the cards don't have an annual fee. So the secured card does not have an annual fee. And the secured products are probably the cleanest way to rebuild your credit anyways, especially for someone who needs to come up with a deposit, somebody who maybe wants predictable costs, or someone who just needs positive payment history. And let's talk about the American Express confusion with some of these cards. Some of the Credit One cards are American Express branded, but they are not traditional American Express cards. They're issued by Credit One using the American Express network. When people hear American Express, they hear premium customers, elite rewards, high spending power. But you got to remember, these are still rebuilding products, which means you may not get any of that. But you may still get Amex offers, network benefits, and purchase protections, just like in Amex. But the underwriting is going to be completely different than a traditional Amex. So if you make a payment to Credit One, it could take 12 days for them to actually increase that credit limit to show that you made a payment. So some people, if they're not paying attention, are going to swipe the card and they're going to end up with an over the limit fee, or they're going to get declined. So after reading all of these disclosure statements, I think that these cards are for people who understand the rules of credit, can control their spending. They pay in full every month because some of these cards come with rewards programs. And if you're carrying debt month to month, you kind of negate the reward. So if you can pay it off every month, then this might be a good card for you. If you temporarily need a way to rebuild your credit, absolutely go for this card. But this is not a long-term card for you to keep. You're going to hurt yourself if you continue to carry balances, if you use it like it's second income, if you take out cash advances, or you don't understand the fee structure. So, are Credit One cards a scam? No, they're not a scam, but I do think that they're an expensive product to be used to rebuild your credit. So use them as a tool, a very expensive tool, but a tool nonetheless. And whether they're going to hurt you or help you depends heavily on you and you paying attention to the fee structure. So if you get an opportunity to work with Credit One, please make sure that you actually read the disclosure statements on your cards so that you don't end up drowning in debt. I'm Stephanie Adams, an accredited financial counselor, and I'll see you in the next review video.